Hi traders, you're welcome to this video. In this video, I got something special for you. It's a powerful reversal trading strategy that will change the way you look at market turns. So if you've been struggling to catch those key reversal points, this strategy will help you get the upper hand. So let's dive right in, okay? Now, reversal trading is all about spotting that moment when the market switches direction. It's a bit like catching a wave right before it crashes, right? So unlike trend following strategies where you ride the market's momentum, reversal trading focuses on capturing the peaks and troughs, right? Aiming for a pivot in price action. Now, to do this effectively, we need to focus on three major components: support and resistance levels, candlestick patterns, and technical indicators. Those are the three major components that we need to focus on. So first up, support and resistance. Think of support and resistance levels as invisible walls. They're like invisible walls in the market, that price tends to bounce off, right? When a price repeatedly touches a level and doesn't break through, it's a signal that that level might hold, okay? For a reversal, I like to look at areas where the price is overextended. Imagine a rubber band stretching and snapping back. That is what we aim to capture, right? So you have to mark these levels on your chart, levels where price got to but got rejected. For example, we can see this multiple times, at least 2 times. Remember, these are zones, right? It doesn't mean that it's just at one particular price point. These are actually zones. So you can see that price got rejected here, here, and here. At this one, you can see price got rejected here, price got rejected here as well, and got rejected here and here. Here we can see price got rejected here, here, and here. At this point, we see price got rejected at this zone here and here as well, and here. Okay, so these are zones. Price got rejected here and here. You need to mark them on your chart. Now let's talk about candlestick patterns. Okay, specific patterns like the hammer or shooting star, or any other candlestick pattern that you know of. There are a lot of them. These patterns can be strong indicators that a reversal is likely. Okay, so look for these at support or resistance zones, as they give insight into how traders are reacting. For example, if you find a bearish candlestick pattern forming at a resistance zone, there is a chance that a reversal is about to happen, especially when it was just after a consolidation, right? Perhaps just after a consolidation, you find a bearish candlestick pattern occurring around the resistance, maybe just after a bullish trend happened and you saw a consolidation, and then you notice a bearish candlestick pattern forming around the resistance. It could be that a reversal is about to happen. Okay, on the other hand, maybe just after a sell trend and you notice a consolidation, and then suddenly you notice a bullish candlestick pattern forming around the support, it could actually mean that a bullish reversal is about to happen. It doesn't mean that it will always play out that way, but it could be that a reversal could happen. Okay, all right. So for instance, let's say maybe you find the hammer pattern near its support level. Okay, I'm checking here to see if I'm going to find something like that. Well, we have something like a hammer around here. Okay, so and this formed around the support, right? So this shows that a bullish reversal is possibly happening. Now, I don't know if I'm going to call this a bullish reversal because this is coming from a bullish trend. So in this case, this is not a bullish reversal. This is more of a bullish continuation. Okay, this is more like a bullish continuation. But had it was a bearish trend that just completed, and then we had this happen, that's when it would be a bullish reversal. Okay, but such situations, still happens as reversals. This one now is continuation, but it can still happen as a reversal. Okay, it can happen as a reversal. It can even happen as a pullback. Okay, and it can happen as a consolidation. All right. So now here's where the strategy really takes shape. Okay, indicators like the RSI, or the relative strength index and the moving averages help confirm what we see. Okay, it helps to confirm what we see. Now, the RSI is a fantastic indicator for spotting overbought and oversold conditions. I'm just going to add it to the chart right away. So with RSI, we can see overbought conditions and oversold conditions, right? The RSI tells us when the price of the asset is probably about to take another turn, right? So we can see in this situation, the RSI was in the overbought territory, and then just after a while, you can see that the RSI began to drop below the 70, and then shortly afterwards, you see price came down. Okay, so the RSI can be very useful for telling us when a reversal is about to happen. Okay, and then as for the moving average, let's just add on the 50 moving average, for example. The moving average, okay, can tell us also when the trend is possibly changing. For example, when you have price drop below the moving average, and is trading below it. In fact, when you have something like a retest, like what happened here, it even confirms that breakout and shows that perhaps a bullish, a bearish in this case, because we had a bearish breakout and a retest. So it shows that perhaps a bearish reversal is starting. Okay. Now remember, not every reversal setup will work perfectly. Okay. That's why managing risk is crucial here. Make sure to set your stop loss just above the resistance, that's for a sell, okay, and just below the support, that is for a buy, okay, to limit losses if the trade doesn't go your way, right? This strategy isn't about guessing, it's about reading what the market is showing us and acting decisively. All right, and there you have it. This is the fundamentals of a solid reversal trading strategy. Okay, this is like the basic a strategy that you can use to trade reversals. All right, so remember, practice makes perfect. Spend time studying these setups in a demo account before diving in live. It's about patience, discipline, and sticking to the plan. Don't forget, if you found value in this strategy, hit that like button and subscribe for more trading insights. Also, turn on your notifications so you don't miss out on future videos that will help take your trading to the next level. All right, thanks for watching and happy trading.